Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus yen. The move to the downside has continued this week with a sharp move to the downside yesterday and another move to the downside in trading here today. That was started all in last week's trading when the market got out of this trading range through here where the price had moved up and down in a very narrow trading range. We did have breaks a little bit to the upside and a little bit to the downside. But when the price started to move lower here and here and here, we've seen a big move to the downside. The high price came in at 145.056, 66. So the low price today came in at 140.15. So a big near 500 pips to the downside here. There's growing speculation that the Bank of Japan may make adjustments to its yield curve control at its July 28th meeting. That's contributing to the gains in the yen. Speculation is a monthly labor survey for May, which confirms accelerated wage growth is one of the catalysts. Also, comments from the Bank of Japan's Deputy Governor Uchida, where he said that we will continue yield curve control for the time being. Maybe that for the time being was something that gives traders some idea that perhaps they will look to change that policy going forward, and that is leading to the interest into the yen and the sharp move to the downside here from a technical perspective. Now, what next technically? Well, we've moved into, I'm going to put this on the 4-hour chart here. We've moved into a swing area through here between the 140.22 to 140.45 level. This level is defined by a number of different swing highs and lows in this area right through here, more so through this period right through here, and we tried to move to the upside, came back down, and tried to use that level as resistance, but then bounced higher and continued to move to the upside here. So this area is of interest, and that's where the market came down to and through, and actually, but has since bounced back. We're currently trading at 140.59, which is outside of this range, just above the 140.45 level. So we are trying to see a move back to the upside here, at least in the short term for this currency pair. Going back to the hourly chart, we will be watching up near the 61.8% retracement of the move up from the low price that we saw back here on June 1st that started that last trend move to the upside. That level comes in at 140.95. Let's 95.9. Let's call it 141. The high price in trading here on this corrective move did find resistance sellers against that level. So that level is going to be our risk-defining level here, and bias-defining levels in the short term for this pair. As long as the price can remain below that level, the bias remains more to the downside. Big chunks being taken out in the dollar versus yen and trading here today. The bears are in control, but we are moving into a support area. We will see how that plays out. Watch the 141 area on the top side now for resistance. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.